Stocks touched a little green there with the Dow and lost it. Joining me, Cooper Howard's going to shift our focus back over to bonds, Director and Fixed Income Strategist at Schwab's Center for Financial Research. We had a conversation at the top of the show with the CEO of Better.com, a mortgage originator, Cooper, that they're seeing people getting ahead of an expected ability to refinance later this year. What do you think about that?
You know, I think that that's pretty interesting, Oliver, especially given the fact that the Fed projected that they're going to continue to cut interest rates later this year. Now, I think one of the reasons might be just a lot of uncertainty in the markets right now. So I think that's one of the themes that we really saw or heard from Chairman Powell and a lot of the other Fed officials yesterday is just uncertainty of what's going on. So I don't have an exact good reason of why people are trying to get ahead of it, but potentially the uncertainty of just what's happening in the markets overall and what potentially could happen with the economy going forward.
Seems like there's some confidence in the air that Jerome Powell is indeed going to be in a position to cut later this year. And we're now up to like 80% for June. Does it seem like they're ready for that based on yesterday's comments to you, Cooper?
You know, I think the big thing that really stuck out to me, Oliver, is just the uncertainty over the outlook. If we look back over the past couple of weeks, just since the new administration has come into office, a lot has changed. So I think looking forward, I think Chairman Powell really reiterated that a lot could potentially change going forward. So they want to take a slow and cautious and measured approach. Our view is that they are going to continue to cut interest rates, Oliver, but the pace at which they cut and the timing in which they cut, I think that obviously is going to be very data dependent. And where the data goes from here, that's really another theme that we've seen play out, that divergence between that soft and that hard data. The soft data, the kind of questions that people are being asked and the surveys that they're being asked, that comes in pretty weak. We saw that with the University of Michigan number. But then if we look at the hard data, say like today's jobless claims numbers, or the unemployment claims numbers, those are coming in relatively okay. So we're seeing a little bit of a divergence between that soft and that hard data. And I think we'll see which one of those comes to fruition. Does the hard data continue to perform relatively okay? If that's the case, my anticipation would be that the Fed doesn't cut by those two times.
Okay. Now, they did, though, cut already without deeply significant economic deterioration. Would you agree with that, Cooper? So is your point then that at this juncture, they're a little bit, we haven't seen enough progress on inflation for them to allow cutting without deeper deterioration?
Yeah, I don't think we've seen enough progress on the inflation front for them to cut at this point. So
Okay.
I think that we would have to see inflation either stall out, or we would have to see inflation move down even lower, or show signs that it's going to be moving lower for them to continue to cut.
What about next week?
Also,
You think PCE looks good? We lock that June in?
I think it's too early to say that we can lock anything in this environment, Oliver. I think the other thing to watch is just a lot of the labor market data. That's the other side of their mandate, and we'll see exactly what happens with that. Labor market continues to perform okay, but if we see some deterioration there, then yes, I would anticipate that would strengthen the case for a rate cut.
Okay. The number next week, do you think it does carry some weight, though, if the market stays under pressure and then PCE misses? He's going to make some people unhappy if he doesn't cut, I feel, Cooper.
You know, it always is going to carry some weight. I mean, it's inflation, given the environment that we've been in recently, to where concerns over inflation are very heightened. Yes, PCE is going to carry some a big importance, especially since that's the Fed's preferred metric to watch for inflation. So yes, I think that it's going to be an important one, but a lot of the metrics that have flowed into inflation or flowed into PCE, we do have a little bit of a sense of where it's headed going forward.
Okay. Cooper, lastly, the data this week is pretty solid, right? Just to come back to that point, we stopped missing our data. The economic surprise rate is starting to inch higher now.
Yeah, the data has come in pretty solid. But I think the big theme of this week was what the Fed projected and really what the Fed said. We saw today 10-year yields continued to trade lower in terms of the yield on it. But really what reversed that course were the housing numbers. So that again goes back to that hard data coming in better than expected or holding up all right.
Okay. Appreciate it. As always, Mr. Howard, thanks for the thoughts.
Thanks, Oliver.
Cooper's Director of Fixed Income Strategist at the Schwab Center for Financial Research.